All right, Cleve, thank you for that. That's great information. And Cleve will be out and about today showing property, listing property. If you want a great real estate agent, he's the guy to call. Cleve has been in the real estate business, good gracious, since they were carving contracts out on stone. And it's always an honor to work with him and his team. So, all right, let's get right down to business on what's going on in the real estate industry and economic industry as it pertains to you. Because a lot of the time, my listeners, you may not be out looking for property right now. You might already own a property. You might not need to refinance. But it's important that you've got enough information that you know what your biggest and best investment is doing for you at any given time. And that's my job to report that. So let's first start off with mortgage rates. What are mortgage rates doing? Well, I can tell you this much. They're not going down. And this week was another rocky week. We know the Fed had another Fed increase this week. I'm going to tell you something. It's just absolutely incredible as to what interest rates are doing and how they're going up so quickly. Now, let's put that in perspective, because we know that interest rates are going up. Okay, we're going to expect that they're going to continue to go up. We don't know where that's going to end, but I can tell you this much. I am not out of the market for buying property. And I'll be honest with you, I just bought 2 properties in the last 30 days. I just bought 2 more properties in the last 30 days. Why do you think I'm buying properties? Because I like paying higher interest rates? No. But I like making money. And I know that there's money to be made in this market. So here's the secret sauce that a lot of folks they're so polarized by interest rates and prices going up that they miss out on opportunities. And that's why the rich get richer and the poor get poorer. And that will continue to happen throughout evolution. If you don't want to be in the poor get poorer and you would like to be in the rich get richer, then you have to play the game. You've got to get into the game of real estate. Now, listen, I don't invest all my money in real estate. I have some stocks, I have some bonds, I have some mutual funds, I have some of my favorite stocks. I'm in the S&P, I'm in the NASDAQ. I mean, I do diversify my investments, but I can tell you this much. I make more money in real estate than I do in any of my other investments. I'm just smart enough to know that I should diversify. So let me tell you, as interest rates go up, you're going to see that your payments will go up accordingly. So how much do they go up? Well, every 1% that the interest rate goes up on about a $300,000 loan amount, you can expect that your payment's going to be about $193 a month higher. That's about an average, okay? Now, let's just put this in perspective. Let's just say you wait and you go, you know what? I'm going to wait and let the market cool. I hear people say that. I'm going to let the market cool. So let me tell you what cooling means. It means that it'll slow down a little bit. You will not experience as much appreciation in the future as we're seeing in these unrealistic times. People don't generally see 20-25% appreciation in a year. I mean, good gracious, in Seminole County alone from March to April, they went up $24,000 on the median sales price in 1 month. $24,000 in 1 month. That's what the value went up to. So here's what is not going to happen. You can write this down. You're not going to see a reduction in prices coming forward. They're not going to go down in price. You can't have real estate go down in price when you're experiencing inflation. And inflation just means that the cost of products cost more. So if the cost of products cost more, how do you think you can build a house for less? It's not going to happen. They're not going to sell homes for less money. What will happen is we won't experience that extreme level of appreciation moving forward in the future. It will slow a bit, but I want to, let's just talk real numbers, because I'm a numbers guy. I don't get emotional about properties. I just bought 2 investment properties. I'm looking for 2 more. I'm looking over around the coast. I'm looking up in Ocala. I've got a lot of things that I'm looking at because I see areas of Central Florida that are still underserved and undervalued that will catch up. So my prediction is the median sales price in Central Florida will go from $390 to $640 by 2026. That's my prediction. It'll just about double in price, not quite double, but about 40% increase. So I'm expecting about a 15% increase in my values in the next 5 years. But I don't expect that over the long haul. And I'm going to put this in perspective. How much do you make on your 401k or your investments in the market right now? And let's just look at it over the last 12 months. Don't tell me I lost my butt in the last 6 months. Don't tell me I made a ton of money last year. Let's just look at the last 12 months, 24 months, 36 months. Okay. What do you expect to make? 10%? 7.5%? 7.5% is about what you should really expect to make over a long period of time. Okay, some of my investments I made 30% last year and the year before, but sometimes I lose money on them too. So when you average it all out, it's about 7.5%. So let's just look at this. If you buy real estate and you put minimum amount down, 3 to 3.5% down, and that house goes up only 3% appreciation per year, just 3%, not 7, not 10, not 15, not 20, not 25% like we've experienced, just 3, slow and steady. How much do you think your rate of return is on that? Well, I'm going to tell you what it is. If you put 3.5% down, your rate of return with a 3% appreciation per year is 86% return on your investment per year. That means in 5 years, you made a 455% return on your investment. 455%. Now, keep in mind, the investment is your down payment. It's not your closing costs. It's not your escrows. It's just your down payment. The rest of the stuff are just fees. So when I buy a property and I look at it, I go, do I need to make 20%? No, I'd love to, but I don't expect to. I'm going to make 3% per year. Now, I can pretty well assure you that in the next 5 years, I'll make 15% per year. But over the long haul, I only need 3, because at 3%, I can make an 86% return on my investment every year. Now, let's just put this in a different frame. Let's just say that you only got 7% appreciation per year over 5 years. So 7%, if you receive 7%, then you got a 200% return on your investment with a 3.5% down payment. Put 3.5% down. It goes up 7%. You do the math. You made 200% return on your investment. In 5 years, you made 1,100% return on your investment with a 7% appreciation. Now, you tell me that you can find a better investment with security, okay, with the security. Because look at a stock, and don't get me wrong, I said I invest in stocks, but a stock could go completely bust. Now, I don't think Google and Tesla and all that are going to go bust, so I invest in them. But I think, personally, that a stock could go bust. It could drop in value. They could have a lawsuit. They could have whatever. And you could see a downturn. But a house isn't going to go down in value. You only, listen, all of you listening to the show have seen one time. Let me just give out this phone number. You can call me at 407-250-9144. That's 407-250-9144, or WeBringYouHome.com. That's my website, WeBringYouHome.com. I'm in the business of doing mortgages. I'm here to help you out with your mortgage. Now, look, if we saw a 7% return on our investment over a long period of time, you're going to be really safe with that. But you're even going to be just as safe. You'll be safe with 3% return on your investment. So I look at that over a long period of time, and that's where I'm going to make money. So I'm investing in real estate. I'm putting my money where my mouth is. I'm out buying properties right now. Now, with interest rates rising and the prices of house going up, who do you think is hurt the most? Okay. Now, let's just look at this. This is not a political message per se, but I'm political, and I will say what I want to say because it's my show. Now, you look at the price of goods going up. You look at the price of fuel going up. You look at the price of housing going up. You look at interest rates going up. It's all happened during one administration. We didn't have this before. We did not have it before. So who's hurt the most? The first-time home buyer and the lower income status based on census. So if you're lower income, you're hit the hardest. Because, listen, I make a lot of money. I do pretty well for myself. Can I afford $5, $6 a gallon for gas? $7? I can do it. It's not going to really affect my lifestyle, but it'll affect most people's lifestyle. Now, I feel fortunate because I invested wisely and I'm okay. I have enough to support myself. But many people out there listening are living paycheck to paycheck right now. They can't afford the extra prices. They're going to choose between gas and eggs. That's what you're going to choose from. But I'm going to tell you something. If you don't boil it down to this administration, I think you're making a huge mistake, and they'll spin it like crazy. Now, and both sides spin it. Don't get me wrong. Both the right and the left spin it. But I will tell you something. I see most people, and I get to look at financials every day. That's my job. I look at all of your financials every day. People did better before than they're doing today. They did better before than they're doing today. It's just a fact. They made the same amount of money, but their expenses were a lot lower. So your dollar went a lot further. So who's hurt the most? I find that the majority of minorities, now this is not a blanket statement, but the majority of minorities voted for Biden in office. Guess who's getting hurt the worst? Just the ones that put him in office. I didn't vote for him. I wouldn't vote for that clown. He doesn't even know what side of the bed he's waking up on. So, I'm just saying that that's a problem. If you don't get these people out of office, you're going to experience another 4 years of this after this. It will happen. And I think that they are forcing people to be so enslaved by the government that that's their agenda. They want you to feel pain because then they'll have you so reliant on government that they force you to vote for that. And that's their agenda. That's what they do. And that's my political presentation on that. That's my political view. You don't have to like it. You don't even have to believe it. But it is the way that it is. I'm the Lone Ranger. CrossCountry Mortgage, 407-250-9144. So I spoke my piece. Now my piece is to help you because I see that you're at a disadvantage. So I've got every loan program that you possibly need to get in the market. So if you're a first-time home buyer, we know you're getting hit the worst. You are absolutely getting hit the worst. So I've got programs that will help you get into a home. I've got USDA, they're zero down. I am an expert in VA. I've been doing VA loans for 33 years. I will help you with that. You just call the Lone Ranger, CrossCountry Mortgage, 407-250-9144, or WeBringYouHome.com. Stay tuned. I'll be back in 5 minutes.